SEBI and NISM are officially on the hunt for India's sharpest minds in the National Financial Literacy Quiz 2026. Whether you are a UG or PG student, this is your arena. Phase 1 is the college round. Crush the college round and you move to the regional round. And finally, we'll fly to the grand finale at the NISM campus. The college round is live right now. Scan the code. SEBI.
So this was about the National Financial Literacy Quiz. This is a joint initiative of NISM and SEBI. For more info, you can visit our website nflq.nism.ec.in. So hello and good evening, everyone. I am Mansi Ghanekar, working in the Investor Education Department of NISM. NISM is the capacity building initiative of SEBI. We at NISM conduct a wide range of activities at various levels with the objective of improving quality standards in the securities markets. At NISM, we work in 5 broad areas: long and short-term academic programs, certifications for market intermediaries, e-learning programs, training programs for working professionals and academia, and various investor education initiatives. We introduced a series on proper financial planning to ensure goal fulfillment, comprising 4 episodes scheduled in March 2026. The previous episode focused on the topic planning for children's education. Today, we present the second episode on the topic Buying a Home Needs Careful Planning, What Every Indian Aspires to Have, by Suresh Sadgopan. Mr. Suresh Sadgopan is the Managing Director and Principal Officer of Ladder 7 Wealth Planners Private Limited, a SEBI registered fee-only financial advisory firm in India. Ladder 7 is known for its expertise in financial planning and advisory services for over 2 decades. He holds an MMS and certifications like CFP, CTE PTM, and RLP. He is a frequent speaker and writer on financial planning and personal finance. Mr. Suresh founded the Financial Planners Guild India, where he serves as a president. He is also a founding member of the Association of Registered Investment Advisors. So now I would request Suresh sir to begin with the session.
Yeah, thank you so much for the introduction, Mansi. It is my pleasure and privilege to be doing this session for NISM. So thank you very much for being here. Last session, it was about children's education, which is, of course, one of the most important topics, one of the important goals. I'll just share my presentation, please.
Yes, sir.
Yeah. Able to see the presentation, Mansi?
Yes, sir, your screen is
Yeah.
visible.
So there are a few recurring goals which keep coming up with people because they are very, very important goals. One of them is children's education, children's future. One of them is buying up a home. One of them is retirement planning. So these are some of the important goals which everybody is concerned about. I mean, we will have to really plan for that. And the one I'm currently going to talk about, which is about uh, planning for the home, is a goal which will actually take up a lot of money, especially if you are in one of those cities or towns in India, which is a metro or a grade A, grade B city. The amount of money that you will require is humongous. Yes, as far as the home is concerned, you do get a home loan, but still, I mean, ultimately, a loan has to be paid off, so the EMIs will come on your shoulder. So we will need to really look at all the aspects, not just the financial aspect. Financial aspect being a very, very important portion of this. So let me get into the financial planning portion of it, I mean, as an introduction, and then let us carefully step into what are all the things that need to be done uh, before we uh, before we plan for a home. So, of course, planning is very, very important. I mean, without planning, it is going to become very chaotic. And a lot of people, I mean, we all earn for something like 35 to 40 years. And the money that we are getting, we need to plan properly. So, what is financial planning? It's basically a blueprint that we create to achieve whatever important goals with the amount of money that we have through proper management of the available money. So that is very briefly speaking what is financial planning. The other typical uh, typical definition I give is where are you today, where do you want to go, and how do you get there? And how do you get that portion is the financial planning portion. So financial planning, the basic tenets are not really very complicated. The only thing is, I mean, most people are not really disciplined enough to follow that. In fact, most people are not even paying enough attention to the basic tenets of financial planning. So I've talked about the typical important goals, which I've mentioned here. Now let us talk about home buying. It's a major goal. It's not a goal of one person alone. It's a goal for the entire family. The entire family wants to stay under their own roof. For a typical Indian family where there is a husband, wife, children, and maybe parents and things like that, everybody wants to have a home which they can call their own, and obviously they are also looking for furnishing the home in the way that is appropriate for them, with all the facilities that they cherish. So it's a very very important goal. It's a goal which evokes a lot of emotions, but it also involves a huge amount of commitment. If we talk about the metros or E-class cities, I mean, you will not get a property below a crore of rupees. I mean, we keep talking about 1 crore, 2 crore, like it is a very small amount. But the point is, I mean, to accumulate 1 crore of rupees actually takes an entire lifetime for a lot of people. So we are really talking about a huge financial commitment here. And so the whole thing cannot be bought by one person with just their own money. I mean, some people can, but that's a very, very small sliver of the entire population. Most of the people will have to take a loan, and that is what the statistics also reveal. Most of the people do take loans for homes today. Of course, these days people have started taking loans for even small things like a washing machine and a fridge. But washing machine and a fridge is a completely different proportion. That may be tens of thousands of rupees. Here we are talking about crores of rupees. So, I mean, a loan is virtually going to be there in almost all the cases. So it's a huge financial commitment. Uh, but the point is, while we all aspire for a home of our own, there are multiple things that need to be considered, and we are going to discuss about some of them going forward. So, what are the reasons why people buy a home? There is a sense of security. A lot of people tend to feel that in a rented home there is no sense of security, whereby they may be asked to go out of that home after 11 months or after 22 months and things like that. So there is no stability in that. So people want to feel rooted. People want that sense of security and stability, and that is one of the reasons why people will want to buy a house. There is a sense of pride and ownership, pride and prestige in terms of owning a home. It is something which is emotional. It is something which people even flaunt, and this is a very very fundamental, and you can say primal instinct of people. So that is one of the reasons why people go for a home. In a rented home, there is only so much that you can do in a rented home. Whereas if it is your own home, you can configure the way you want, you can actually furnish the way you want, you can build in the facilities and comforts the way you want. So, which is definitely, I mean, that is something that we will have to concede. In your own home, you can do whatever you want, the way you want, you can furnish the home. So, for all those reasons, people want to buy a home. But the only thing is, we will have to assess what kind of property that we need. So what I mean by that is, suppose we are able to spare, for example, let us say 20, 30 lakhs, and then balance maybe 70, 80 lakhs, we are able to take a loan. So in about 1.1, 1.2 crores, if we are able to get a home, will that home be the one that we really will be satisfied with? So that is the question to answer. A lot of people actually tend to think that having your home itself is very important. While having a home is important, probably, but more importantly, having a home which is suitable for your family is even more important. So we need to consider how many people are there in the family. So, for example, if there is a family of say 5, 6 people, buying a home which you can afford may not be the ideal home for the family. So these are two different things. So there is also this thing that I want a home in a particular area. Okay, so in that particular locality or area, is this really feasible to buy a home of your choice? I mean, the area that you want inside the home, which will accommodate the requirements of all the family members. Is that possible for you to do in that area? One of the other important things, it's a practical thing. I mean, I'm from Mumbai, so for people from Mumbai, and for that matter, any big city, uh, traveling to the place of work. I mean, still some of the people are probably working from home, but most of us are traveling to the place of work. So if you are traveling to the place of work, the location of the home also matters. If it is in some far-flung suburbs and we are traveling every day, maybe 1.5 hours, or maybe more than that, one side, then it is going to be a huge challenge. So we need to assess whether buying a home at this point in time with whatever resources I do have at this point in time is the right thing, ideal thing to do or not. So that's very, very important. I mean, instead of just jumping headlong into buying a property. So what are the things which influence property price? One of them is, of course, the economic conditions, the employment conditions. All those things impact the housing prices. Whatever government initiatives in terms of housing schemes, incentives, and regulatory measures, these also kind of impact the construction of houses. Especially government has certain uh, subvention schemes and low cost housing schemes. Those things encourage people to buy their own houses. So that also influences the prices of I mean, the purchase of property and the prices of property. Customer preferences, at one point in time, hybrid work or work from home was the predominant method, especially during COVID. So a lot of builders did come up during that time where they constructed a separate room or a separate nook in the home where you can sit and you can work. So what kind of home do you want? What are the amenities and what are the quality? What are the facilities that you want in that particular property is also something that you will have to look at, and based on that the property price will be different. For example, there are certain properties where there is a podium garden, there is a jogging track, there is a gymnasium, there is a sauna, there are other facilities like meditation center and things like that. So if a lot of such facilities are there, then the cost of the property, it could be a sought after property, and the cost of the property can be high. There are regional variations, obviously. Typically, in the metros and tier 1, 2, 3 cities, the cost tends to be high. If it is a mofussil area or a small town, the cost tends to be low. And the kind of properties which are there in those areas also can be very, very different. In some of the smaller towns, people buy a land and they construct their own property, which is not possible at all in a say tier one city or a metro city. I mean, it's beyond the reach of most people. So we have to make do with let us say a typical flat. So the other thing which influences the property price is the interest rate itself. um, Whatever we are borrowing in terms of what we need to pay to the builder, we will have to pay the interest back and the principal back. We will have to do that. So higher the interest cost, it will dampen the requirement of property. People will not be able to afford that kind of property. So these are some of the things which influence the property movement and the property prices itself. Now, rent versus buy decision. Let me go back to what I talked about earlier. So you will have to really look at how many people are there in the family, what will be a convenient configuration or a size of the home for the people who are there, not just whether this is my home. See, for a lot of people who call that this is my home, it is actually not their home at all, because in the initial several years, it is going to be owned by the loan agency more than this person, because the loan agency would have given 70-80% as a loan. Let us say it is HDFC or ICICI or any other agency. Now that agency is actually owning the house and you are actually paying back. So just because the home is on your name, it does not mean that it is on your. So let us understand that particular fallacy. We will have to go for a home which is suitable for our use. Okay, and the kind of homes that we can afford, there is a limitation in that. So that is where probably in some of the cases renting property will make a lot more sense, because you will be able to afford a higher, a bigger space for rent, which is more suitable to the family. That rented property can be closer to the place of work and closer to other places of interest. So from that point of view, for some people, for some time to come, renting may be a good decision. And especially for those people who do not have the wherewithal to put that upfront money and also service the EMI, rent could be a better option. So there are pros and cons in this whole decision. A lot of people tend to think that if we delay the property buying, the prices will go up and away, and we will never be able to buy. That is not really true, because see, the property goes up. I mean, over a long period of time, say 6-7% is the property goes up. So there are times. I mean, people will immediately point out, okay, you have ever heard of this 2003 to 2008 boom? Yes, I do understand, appreciate that the property prices really shot up during that time. But if you look at the period after that, the property prices have gone sideways at certain points. It has not grown at all. And at certain points, there was a time correction, in the sense that the property was valued at 2 crores at 2012, and even at 2019 it was at 2 crores, which means the property has not moved. Actually, the property, adjusting for time, it has actually come down. So these kind of things do happen. So it is not really true that if you can't buy a property today, you will never be able to afford in the future. So that's a major fallacy. It is being bandied about by a lot of people, and I mean, there are people who want to persuade people to buy a property, and they bandy about, and these are family members. They say, if you don't buy today, you will never be able to buy, which is completely wrong. So there is no point in actually buying a property when you are not prepared for it. So you have to really take the correct decision, and probably staying on rent is the right decision for the time when it is appropriate for the family members, when it is appropriate from the choice of the place of work, and so on and so forth. Now, we have said that buying a home is a major goal, okay, and it is. This is a goal which can take up maybe crores of rupees. A good amount of money will probably come from your own sources. Maybe 20-30% may of the property value. So let us talk in round numbers. Suppose the property value is, let us say, 1 crore. Probably you may put up, say, maybe 20, 25, 30 lakhs from your own resources, and then balance you may probably want to take up a loan from the agency, subject to the fact that you are eligible for that kind of a loan, assuming that you have the capability to service the appropriate EMI, and after taking care of all the regular requirements in terms of expenses, the loan agency will be willing to advance a loan, and one will be able to go for buying the property. Now, what really happens in most people's cases is that, since this is a huge outgo, and in a lot of cases, the outgo can be as high as maybe even 55-60%, even more than that. I have seen that also happening in multiple cases. So what happens is, this kind of impacts other goals. It may be vacation, it may be in terms of what one may want to buy at home, the way you want to travel. It can impact a whole lot of things. So one has to be very, very careful when buying a home. What time one is buying a home is very, very important. That has to be a calibrated decision. Lot of times we have seen this also. Whatever is there in the portfolio, almost the entire portfolio goes out, and there is no liquidity at all for the people, for the family. If something comes up, there is no liquidity at all. So it exposes the person in terms of any unforeseen event. Okay. Yeah. Another thing which I've seen is that typically in a married person situation, both the husband and wife together take a loan. They take into account their combined income, and based on the combined income, they go for a loan. Uh, there is nothing wrong with that at all. Absolutely nothing wrong. The only thing which they will have to clearly understand is that if they are going for a loan on a joint basis, they are forfeiting the opportunity to maybe give up the job for raising a family, or for any other exigency. They really cannot give up the job. And this particular thing I have seen with many of our clients. They have gone for a home, they are servicing the EMI, both the incomes are absolutely necessary to service the EMI. So the other person to take care of the children, to take care of the family, if the lady of the house wants to take that call, that becomes very, very difficult because both the incomes are required to service the loan. So this is something that we'll have to be very careful about. So this can impact somebody's intention to maybe stay at home and take care of the family. So you have to be very, very careful while actually going for a home. What is the right time to buy? This is a very, very fundamental question. A lot of people must have heard from their parents that the right time to buy is in your 20s. I would not really suggest that the right time to buy will be in the 20s, because I mean that is the time when one is exploring one's career opportunities. And typically what happens with most people is that people want to grow in their career, people are learning, people are willing to relocate wherever their career takes them. So they may move from one city to another city, one country to another country. So all these kinds of things do happen. So in this kind of a situation, if they have the money also to buy a home, it is going to be a liability from their point of view. Suppose, for example, somebody somehow has found the money to buy a home in, for example, a city like Mumbai. What really happens later on is that suppose they get a very, very good opportunity in, for example, Hyderabad. So what really happens is they will move out of this house in Mumbai because they will have to be in Hyderabad. They will go, they will rent another property in Hyderabad while at the same time paying a EMI for the house which they have already taken in Mumbai. And this is not hypothetical. We have seen this happen with many of our clients, especially clients who are young. We have seen that happening time and time again. So the right time to buy is not really when you are very young. First and foremost, I mean, the most fundamental thing is when you are very young, the amount of money that you may have and the ability to service a loan is also hampered. You don't have too much money, and the amount of income that one may be earning comparatively will be less, and the ability to service a reasonable loan will not be there. So even assuming one can buy a house, one will buy in the far-flung suburbs and may not be the most appropriate place for the family to settle down at all. So the fundamental question that one needs to ask is, have you decided that you are going to settle down in this city, in this area? This is a fundamental question that one needs to ask. Most of the people do not ask this question. When they go to any city, even if they are not from that city, after 3-4 years, they figure that they are paying too much rent, and they have also liked the city, and they want to buy a property. And typically, we see this cycle. After 3 or 4 years, people get that urge to buy a property in a particular city. In fact, that urge comes again and again, and we have seen people moving after 4 years, 5 years to another city. They get the urge again, they buy another property. So we have seen people who have 2-3 properties in 2-3 different cities, and the entire money that they are earning, both the husband and wife, are going towards the EMIs. So it's very, very important to understand that yes, we require a home. We require a home in which we can live, but we need to really decide. I mean, if I am from Mumbai and I want to pursue opportunities only in Mumbai, and I'm probably even willing to forfeit opportunities, or I'm willing to move on my own, allowing the family to be here. So if that is the outlook, then probably you have come to the point where you can potentially consider buying a house. Otherwise, it will be like the example I have given. You will buy property in one place, you'll go to another place, again rent out a property, you'll be paying an EMI in the first property. There is no point in that. Uh, we will have to carefully evaluate whether we really have the money to pay upfront, and we will be able to service the loans comfortably, and also pay for other whatever other incidentals are there. When I say incidentals, people typically consider the price of the property. Price of the property, let us say, is 1 crore. So suppose you have, let us say, 25 lakhs and you are taking 75 lakhs as loan. That is not the only cost, because registration and stamp duty is also a cost, which typically is about 6%. So that also one will have to factor in. And the kind of homes that most of the builders are delivering are homes which will need furnishing. So you will have to add up another 15-20 lakhs for a home like this. So take it as roughly 15% or 20% of the home cost. That will be the kind of furnishing cost that will be there. So a 1 crore property is not exactly 1 crore. 1 crore property may actually turn out to be 1.25 crores when you add up all these things. So do you really have the wherewithal to service that is something that you will have to factor in. The other thing is, yes, you are going to probably save on the rent, assuming that it is a property which is ready to move in. If it is not a ready to move in property, you will be paying the rent and you will be paying the interest on the pre-EMI, you will be paying the interest. So for some time to come, both the things will go hand in hand. So you need to really consider whether you are really prepared for all these things. Arriving at the right property decision, I think we talked about this. Is it really suitable from your family requirement point of view? Uh, People want to live in a particular area, maybe because of the school, maybe because it's a convenient neighborhood in terms of various amenities which are there, or maybe it's a Tony neighborhood which where they want to live, or maybe it's a neighborhood where their relatives and friends have always been traditionally staying. It can be multiple reasons. So, what is that area that uh, you want to go and buy the property? In that area, will you be able to afford? So these are some of the basic things which you will have to look at. When people are paying rent, they talk about the rent, maybe 50,000, 40,000, 60,000. When you buy a house, and especially the new houses which are coming up today, there are lots of amenities and there are lots of facilities. So there is also a society charge. So in many of the cases, the society charges can actually come up to a good big package. So it can be 15,000, 17,000, 20,000. So it's like you are in your own property and you're also paying something which looks like a rent. It may not be as high as a rent, but you are still paying something which looks like a rent. So you will have to understand what are the ongoing costs, and especially in terms of the newer properties which are coming up now, even the property tax is actually comparatively high. So you'll have to factor in all these things and then only take a decision. Otherwise, later on it will come back to bite you. So yeah, so again, these are things which we have talked earlier. One is the amount of upfront funding, and one is the amount of loan that one will have to take up. So upfront funding is in terms of self-funding. Basically, that will probably come from your own sources. A lot of people do not have enough upfront money. So we know cases where they take it from their brothers, sisters, parents, and things like that also. Not a very good situation, because if one does not have the money to pay even the upfront, the typical amount is roughly 20%. Even if you do not have the money to pay that upfront money, it only shows that you are not fully prepared to take that property decision at this point. Okay, so if you are not prepared, the right thing to do is to postpone the decision for a later point and not jump headlong into that, because it's very obvious. If a person is doing that, it's very obvious that they are not really fully realizing what they are getting into, because there are so many other costs which we have just now discussed. Stamp duty, registration, these are the other costs which we have talked about. So in a situation where somebody is buying a ready to move in property in a existing building, then there will be a brokerage component. It is not very big, it may be 1%, but it is there. So suppose it's a 2 crore property, 3 crore property, that is also going to be 2-3 lakhs. So it will be there. It is there. So you will have to take into account all these things. Interior furnishing these days, a lot of people are spending money on interiors and furnishings to make the house livable, comfortable, and this can actually be a pretty packet. And we are seeing that with our clients who are spending tens of lakhs of rupees on their interiors and furnishings. Funding the property, how much upfront, how much in the form of a loan. Typically, if you go to a agency which advances money for a property, they will at least ask you to put in about roughly 20% minimum. Okay, at least. But is 20% the right amount? I mean, there is no particular answer to this, but the answer will come in terms of what is that you're earning, how much of your earnings are actually going into servicing the loan. So That is the thing that you will have to really look at. For example, suppose one is earning say 1.2 lakhs, and let us say 80 or 85,000 is going towards the servicing of the EMI because you have taken a 75 or 80 lakh loan. So then obviously you are under stress, right? There is no margin of safety there. You have only 30, 35,000 in which you will have to manage all the other expenses except for the EMI, right? So that is not really a very happy situation to be in. So it's a good idea to consider how much you will be able to put upfront. The higher the amount, the better it is, and limit the amount of money you are going to pay as an EMI at a family level, husband and wife. I'm looking at a husband and wife situation. At a husband and wife family kind of level, uh, it should be not more than 50-55%. I mean, if it is going to be more than 50-55%, we are going to get into the territory where there can be, you can say, financial stress. So what is the ideal amount that needs to be paid? Difficult to say, but suffice to say that if it is going to go beyond 50% of your income, it's we are walking on the dangerous territory. The other thing which people do is that they take a home loan since they do not have enough money uh, for various other things. They take a loan for everything else. For a stamp duty, they take a loan against some other property, which may be their brother's property, or they may have some other property or a equity interest in some other property. They take a loan against that property, or they take a personal loan. These are all very, very dangerous ways of actually going about funding property. So I mean, the thing to evaluate is, are you comfortable with servicing whatever EMI? And when you are actually doing that servicing of the loan, you have to be very careful not to get into multiple loans, and that can really go into a loan spiral. So you have to evaluate this properly before getting into a loan. Paying off the home loans. So this is a typical tendency of people that they want to pay off the home loans at the earliest. There is absolutely nothing wrong with paying off the loans at the earliest. But the only thing is, home loan is something which is actually a long-term, which is a long-term loan. And the agency has given you the loan. In fact, it is the cheapest possible loan that you can ever get. So 8.75-9% roughly today is the loan. Roughly that is the loan for people who have a good, decent credit score. So if you have a facility whereby you can pay that over a long period of time, why do you want to pay from maybe a bonus or incentive or something like that? Why do you want to pay in a hurried manner? Nobody is really pressurizing you. Okay, there is no loan agency which is coming behind you because this is a long tenure loan. Um, so, what are the situations in which you should prepay? So, there are some situations. If the servicing of the EMI itself is difficult, a lot of people tend to underestimate how much of expenses are there, and later on they figure that they have not estimated the all the expenses and all the other requirements properly, and servicing this EMI along with all the other requirements including their goals has become very, very difficult for them. So if that is the conclusion to which that person is coming, probably if there is a possibility of prepaying some portion of the loan and reduce the EMI, that is a good idea. One of the other things which people also do is, if there is a possibility for a very young person, it is also possible to elongate the tenure of the loan. You will have to talk to the loan agency. Then also the EMI can somewhat come down. And of course, later on, if you feel the need for paying down faster, you can the loan tenure can also come down. So that is also a possibility that you can look at. So there are lots of people who talk about FIRE, that is financially independent retire early. A lot of people want to retire at 40, 45, 50 and things like that. It's an entirely different discussion for another day, whether retiring early is a great idea and what is that you're going to do after retiring. So it's a discussion for another day. But if somebody is contemplating to retire or somebody is coming near retirement, then paying off the home loans is actually a good idea because there's no sense in keeping the loan beyond the point where one will be earning an income, a steady income. So this is one of the one of the things where one can contemplate prepaying the loan. If you are receiving a bonus or incentive, if you already have liquidity and you feel the pressure on yourself in terms of the EMI, and you want to reduce the loan amount itself to a much lower amount, or you want to bring down the EMI to a lower amount, then it's a legitimate place to use the bonus and incentive or any other ex gratia or whatever you get to pay down the loan and bring down the EMI. That is a legitimate thing. Or if you feel the pressure, you can bring down the loan. I mean, so both the things. Buying home as an investment. So this is something that people do a lot. So again, nothing wrong. I mean, even real estate is an asset class, along with equity, along with debt, along with commodity. It is a very traditional asset class. In fact, our forefathers have used primarily gold and properties as the primary investment options. So there is absolutely nothing wrong. What is wrong as far as the investment is concerned is that a lot of people tend to think that the only investment which can actually give a very good return is a property investment. And within that, there is a fallacy that only land can give amazing returns as opposed to any other. I have seen land parcels giving an order of magnitude return, like something which has been bought for 1 lakh going for 50 lakhs, 60 lakhs. I've seen that. I've also seen parcel of land which has been bought for 10 lakhs staying at the same 10 lakhs after 10 years. So there is nothing like it's a sure shot way of actually doubling your money, tripling your money, or multiplying your money. So there are certain properties which do well, there are certain properties which don't do well, and you will have to evaluate which will potentially do well. So it's not like every property you touch turns into gold. In fact, as far as property is concerned, there are just too many risk factors which people do not really take into account. One of that is people go for under construction property. There are so many risk factors in that also. Like in spite of RERA, I mean, RERA is definitely a protection today. But in spite of RERA, properties can go into litigation. Properties don't get completed. After completing, also the OC is not received. So there are multiple problems in that, and a lot of people want to book a home at a lower rate because it is under construction. That also we will have to really look at the time value of money. If you have booked a property today and you are going to get the property after, let us say, 4 years, and you have been paying all this year, so you'll have to really look at what is the cost you are incurring vis-a-vis another person who's paying directly at the time of completion. The risks are lower for the person who's paying directly at the time of completion, and that you can possibly look at some portion which that person is paying extra as a risk premium. So he's not incurring that level of risk as compared to another person who's booking an under construction property. So the primary thing which we will have to factor in as far as an investment is concerned, first and foremost, any property is not really liquid. Okay, it has positives, negative, but property investment is not really very liquid. It is a very lumpy investment in the sense that especially a home kind of a thing will be, say, 70 lakhs, 80 lakhs, 1 crore, and more than that. So it's a huge concentration risk if you look at it, and you will be most probably taking a loan for this kind of an investment. So buying a home, and potentially a home which typically is going to give you 6, 7% or 8% return, is not a great idea. The rental yield in India, if you were to look at it, is actually not really that very high. It can be something like 2.5% to 4%, typically for residential properties. In the case of commercial properties, it can be something like 4 to 7 or 8%. Okay, but again, between residential properties and commercial properties, there are differences. I'll touch upon that. As far as residential properties also, let us take the typical rental yield as roughly 3%. So if you have a property which is, let us say, 1 crore, roughly 25 to 30,000 rupees is what you can get. So 3 to 3.5% is the yield on the current market price of that particular property. So if you look at it another way, it is like actually putting your money in a bank in a FD, which is yielding you say maybe 3 or 3.5%. And that 3 or 3.5% also on that also you will have to pay tax, you will have to pay property tax, you will have to pay society charges and all that. So if really you count out how much as a property owner you're going to get, is it'll be roughly half of that. So under 2% is what one will be getting. So now the counter will be that there will also be a property appreciation, which is going to be there. I'm not disputing that. So even assuming you take 1.5% here, and then the property appreciation of say 6-7%, it's going to come to maybe 7-8-9%. It's not going to be something phenomenal that way. And please also take into account property as an investment. There is going to be a tenant. The tenant potentially can create a problem. In some cases, there can be legal problems. After the tenant vacates, you will have periods where the property will be vacant. You will have to scout around for a broker. You may have to do the repairs. You may have to do the painting. So even the 2-3% what you're going to get is not going to entirely go into your kitty. So some of it will go to the broker. Some of it will go in terms of painting. If there are periods of non-occupancy, then yeah, the 2-3% which we are assuming also will not come to pass. So suffice to say that uh, we cannot be very glib about saying that property is one of the greatest investments and let me invest all in property. So many people have told us that we are not against property. Property is fine up to a certain level, but we will have to diversify the investments into whatever other assets. So one of the other things I talked about before coming to REITs is commercial property. There are people who have also bought shops and showrooms and things like that, which they rent out to other commercial entities. The rental yields in these kind of properties are comparatively higher. But only thing is, there are periods uh, when the property will not be occupied. So it is slightly more difficult to get the next person for a commercial property as compared to a residential property. And the liquidity aspect in all the properties is very much there. So it is not really liquid. Some of the best properties may go off in a matter of say maybe a couple of months, 2-3 months. A lot of times properties takes several months to a year or even beyond a year to get liquidated. Any property can sell if you are going to do a fire sale. I mean, it will go in 1 week, but that is not the whole point of buying a property and holding the property for a long time. So you want the realization at the market levels, right? And from that point of view, liquidity normally it takes time. So coming to REITs, so real estate investment trust. So real estate investment trust can be very broadly compared to a mutual fund. In the case of a real estate investment trust, the underlying asset is a property. In the case of a mutual fund, the underlying assets can be equities or debt products or gold or silver or any other asset. In the case of REIT, the underlying product is a property. But these properties are not any kind of properties. These are A-grade commercial properties which are managed by these real estate investment trusts, and they are rent yielding properties. So the rent comes to the REIT, and the rent up to the extent of 90% or beyond is distributed to all the unit holders. And there is also a potential appreciation because these are A-grade properties, they are maintained on a professional basis and they also give an yield. And the most important point as far as REIT is concerned is that there is tremendous liquidity here. This is quoted in the stock exchange. At any point in time, you can liquidate this. I mean, it is just like a mutual fund unit. You can sell tomorrow, you can buy any amount, you can sell any amount. So there is no restriction. The concentration risk, which is there in the case of a typical property where you require 50 lakhs, 1 crore or more, that problem is completely not there in the case of an REIT. So when somebody is considering property as an investment, REIT is also another viable option which one can look at from an investment standpoint. So I'll just summarize this. We are coming to the end of this session. We will, especially when we want to buy a home, we will need to really look at the requirements of the family, not just have a roof over us, over our heads, and call it our own home and somehow live in that property. So we will have to decide what is the requirement of the people at people at home, and what kind of home do you really want to satisfy their needs. Such a home which can satisfy your needs, is it really affordable from your standpoint? Can you go for it? Do you have the money for it? You need to consider all the costs which are there, not just the home buying cost alone. You will have to consider, like I mentioned, you will have to consider the cost of interiors, furnishing, the registration, stamp duty. You will have to consider all the costs while calculating, because that is the total cost you will be incurring. See whether the decision can potentially impact other goals. Some people somehow, pull in money from all possible places and buy the homes, but it can impact adversely the other goals which they may have. So that is not really a great place to be in. Consider the timing properly, like we had discussed about this also. Are you willing to put down anchor in a particular place and settle down in that place? So is the timing right? Is the family going to be in that particular city? And are you willing to travel around in pursuance of your career? So what is the time you want to really buy the property is something that you will need to look at. When do you want to prepay the loan? Do you have the capacity to prepay the loan? And by how much? So that is something. And whether prepaying the loan is a good decision, or investing that money and keeping that aside, and anytime considering prepaying the loan, is that a good idea? So that is something that you will need to evaluate. So that brings me to the end of my session. I have written a book called If God Was Your Financial Planner. Some of you might have read this. This is on financial planning, personal finances. It also covers today's topic in detail. So you can go through that. This is a simple, easy to read story format. And as the name itself suggests, God comes throughout the book, and he talks about the concept of life itself along with money. So if you want to, you can procure this book. So I'm going to share this. I mean, if you want to follow us anywhere, any of these social media handles, you can do that. I mean, we have blogs, we have channels. If you want to follow to get information on various subjects which we write on, you can do that. And that we are coming to the end of this whole session. Thank you very much for paying attention. Thank you so much.
Thank you so much, sir. Now I request attendees to ask their question. I think, sir, there are few questions in Q&A, so
Yeah.
you can address those questions.
Yeah, sure.
Yes.
Yeah, thank you, Sandeep. Thanks for acknowledgement. Yeah, Nikhil is asking, I do have about 45 lakhs home loan still due. EMI of 52,000 per month is going on for about the next 10-12 years. Meanwhile, I do have 25 lakhs of investable surplus funds. Should I use this 25 lakhs for reducing the home loan principal, or invest into FD and continue enjoying the benefits? Okay. So Nikhil, there is no one answer to this. We will have to really look at your particular situation, and we will have to see whether prepaying the home loan is a great idea or not. Like I mentioned before, see, the loan agency, whichever agency has advanced the loan, is not really going to come behind you. Yes, you will be paying an interest. That portion I do understand. So as long as you want to keep the liquidity intact, and as long as the investment options are going to give you slightly more than what you are paying as an interest for the home loan, it is good to keep the money intact and in investment avenues. However, if there is a financial stress that you are facing, because you will have to pay a certain amount of EMI, and you want to bring down the EMI, or you are facing the pressure in terms of the loan on your head, so then consider prepaying to whatever extent that you want. Okay, you are also talking about the old regime, new regime. I think uh, the new regime, for most people, we have found that the, that the new regime is a better one. So please evaluate that carefully. I do not have enough information here to answer that concretely. I would suggest that you should go to somebody who understands the tax, like a CA, who will be able to help you with this particular thing. Karnam is asking, in 20-year tenure, buying home by taking a home loan or starting SIP in diversified mutual fund by using EMI minus rent, which will create more wealth in 20 years? Is property price appreciation or equity return, which will create more wealth? Difficult question to answer, Karna. So, very broadly speaking, that is what I said earlier also. Home loan is not really a very high cost loan. Okay, I would not want to go into this particular method. What I would say is keep your EMI at a certain level. You don't have to accelerate in an accelerated manner. You don't have to pay that because the cost of the home loan is actually low, and divert all the other monies to other investments which can potentially give you higher return. Potentially, a mutual fund can give you 11-12% kind of return, which is above the home loan rate. So it's a good way. So we don't have to really think of the EMI paying, the SIP paying the EMI, these kind of things. We don't have to look at. Ultimately, it is the same, right? I mean, instead of paying the EMI, suppose you are directing some of the money to SIP and you are creating wealth, you always have the ability to prepay the loan at any point because you would have created that wealth. Sandeep, own nest where a family of 4 can stay. Yeah, true. I mean, if you can afford that and you're buying a house, I mean, no questions there. If I reinvest in under privileged construction project, we pay advance amount, we pay interest only, right? Yeah. Mostly under construction project, you pay normally only the interest. And only when the entire amount has been disbursed, only in that situation you start paying the full EMI. You are right. WhatsApp community link, Vicaria, I'm going to share the entire presentation. I would request Sahil to share it with all the participants. So you will find that in that. So you can take it from that please. How can I invest in REIT? I mean, if you have a demat account and if you have a trading account, you will be able to find there are 5 REITs which are available today. You can pick and choose where you want to invest. It is trading is exactly like a stock. So you can go on the portal and you will be able to invest, whether it is BSE, NSE, you can trade, you can buy and you can sell. Any suggestion for first time REIT investor that you would like to share? Very broadly, what I would say is, see, go for those REITs which have been there for a fairly long period of time. Embassy REIT has been around for a long period of time. Mindspace has been around for a long period of time. So if you are a first time investor, that is what I would suggest. They have been operating fairly well for about 5-6 years, and these are backed by good construction houses. So I would suggest considering any of this. I'm not trying to imply that the other ones are not good. I'm not trying to say that at all. Please evaluate that. Since you said for a first time investor, I'm suggesting the ones which have the best longer track record. Maitri Shah, RERA helpful for old tenants also or just new tenants? See, RERA is typically for new properties which are coming up now, whether it is on whether it is redevelopment or completely new. It is basically protection for those people to ensure that the property comes up in a given promised time frame. So it is basically from that point of view. Yeah, how much return can we expect in investment in REIT? That's a good question, Subhranshu. See, REIT is placed somewhere between debt and an equity product. I would say closer to debt rather than equity. The potential return here is coming from primarily two sources. One is the regular dividend or the regular payout, which tends to come on a monthly basis. You can expect maybe 5 to 6% kind of return on an annual basis, 5 to 6.5% return on an annual basis. Apart from that, there can be property appreciation, which can be maybe 1 to 2%. In some cases, it has been higher. So if you are content with say 6 to 8%, in some cases 6 to 9%, then REIT is a good investment. Now you may be wondering why I'm suggesting REIT if the investment returns are somewhat similar to, let us say, debt-oriented product. There are reasons for it. The first thing is most of us invest in equity and debt, and sometimes in commodity. But rarely do we invest in high quality commercial properties. And REIT is all about high quality commercial properties. Here, unlike in the case of your traditional properties, most of the people who come to us have their own property investments, be it in the form of a house, be it in the form of a land or something else. But they never have exposure to A grade properties. Okay, so so that is one of the attractions as far as REIT. This is highly liquid, so that is another attraction as far as REIT. So people who do not want to get into the hassle of having a property, maintaining a property, and getting return from a property. This is investment in property by proxy and high quality investment in property. The other thing, at least as far as REIT is concerned, many of the components which you get in an REIT, like a dividend income, is tax free in the hands of the investor under certain conditions. I'm not going into all that, but under certain conditions it is tax free. So there will be a bifurcation given by the REIT, that trust, as to how much is the dividend income, how much is interest income, how much is the loan which has been advanced by the investor to the REIT, how much is it being paid back. Incidentally, that also does not attract any tax. So that bifurcation will be given. So the tax incidence is not really that very high in the case of REIT. So net net, it will be better from the point of view of the investor as compared to typical debt oriented product on a post tax basis. The attraction here in the case of REIT, the last attraction is that the underlying product, though it is very similar to debt in terms of return, it is somewhere similar. The underlying asset in the case of an REIT is high quality commercial grade real estate. So it is completely different from the debt oriented product, and that is also the other attraction. So when you want to really diversify your portfolio, REIT helps you in diversifying the portfolio to a very great extent. So that is why we like REIT. The book name is If God Was Your Financial Planner. So you can actually take a look at the presentation that will be shared. I mean, the book name is there in that. What is the best rental yield? Buy a home or rent home? See, rental yield is for a home that you own. So if you own a home and if you are wanting to give it on rent, the rental yield is how much rent you are going to get divided by the current price of the property. So suppose you are getting a 3 lakh rental in a property which is valued at 1 crore. So that is a 3% rental yield. So that is how we calculate. Um, if you are renting a home, somebody is actually subsidizing it. So please understand that. If that person is getting a 3% rental yield and you are having whatever money you are putting in, even in a bank, and you are getting 7%, that person is effectively subsidizing you, and that is something that people will need to kind of understand. I'll answer this last question. I wanted some guidance regarding my loan EMI. With my current salary, what are the possible ways to reduce the interest component in my EMI? Also, when does the principal amount start reducing faster compared to the interest in a EMI structure? Kindly advise if there are options like prepayment, tenure change, etc. So possible ways to reduce the interest component is, if your credit score is high, then there is scope for negotiation. If you have a decent credit score and you are looking around with multiple banks, possibly right in the beginning itself, you may be able to get a slightly better loan interest rate. Going to the second one, when does the principal amount start reducing faster? Initially, bulk of what you will be paying in the EMI will be the interest component for obvious reasons. Because you have taken, let us say, 50 lakhs, you'll have to first pay the interest, and then balance which you are paying through the EMI, balance portion only will be towards the principal. So initial years, you will be paying a lot of interest, and over the period, the thing will exactly turn, and you will be paying more principal and less interest. Now, prepayment is an option. It is entirely left to your discretion. If you have followed my presentation, what I did mention was home loan is a low cost loan. If you are finding any kind of financial distress, definitely you should prepay. Otherwise, for most other people, I would suggest that you keep the home loan at a certain level. let it keep reducing over a period of time as you pay the EMI, and you continue to invest in appropriate asset classes so that you parallelly you are also building your wealth, and you also keep the option to use some of that wealth to close or prepay the loan at any given point. So that is my advice to you. So yeah, you are mentioning this for 15 years. I mean, whatever I said, irrespective of whether it is 10 years or 15 years, the advice is the same. So Karnam is saying REIT is quoting more than its book value or its intrinsic value. Is it good to buy that REIT? Difficult question to answer, Karnam. If it is quoting, normally most things will quote more than the book value, because book value is basically the probably the price of the underlying property itself. Okay, so if REIT is quoting only at that level, it is probably going to be undervalued, because the property is also yielding results and it cannot really reflect only the intrinsic value of the property alone. So if there is a situation like that and you're able to take advantage, fantastic. But normally it does not happen like that. Income generation model. What is the income generation model of the REIT? Somebody is asking. It is an income generated through the rental. Okay, these are all high grade commercial property. They are put on long term commercial leases, typically 9 years to 15 years. And there is an escalation clause normally at the end of every 3 years. So it's a very stable rental income that the REIT will get through the way of rental or lease income on a monthly basis. So I think I've answered many of the questions. So thank you very much for asking these questions. Thank you for patiently listening to all the answers. Thank you very much. Appreciate the opportunity to present to the audience. Thank you so much.
Yes, thank you so much, sir. Also, I would like to also extend a heartfelt thanks, sir, for taking time and for conducting this session. And also thank you, sir, again for sharing your time and knowledge with us. And
Thank
also
you so
thank
much.
you to attendees as well who join us today. And make sure that you join for the third episode as well, which is scheduled on 17th of March next week. So yes, thank you so much everyone for joining today's session. Thank you. Thank you so
Thank
much.
you.
Thank you so much, sir. Now I